Greetings, guys and gals. Welcome back. Joseph James here, schooloftrade.com, sidewaysmarkets.com. Today's trade of the day. Now, before we jump into the charts here this afternoon, I want to remind you guys we are just a few weeks away from our 2013 School of Trade Members Summit in Las Vegas, Nevada. It's the same week as the Traders Expo at the Mandalay Bay. We're excited to have people from all over the world are going to be here with us. It's November 21st and 22nd. We got 2 full days of training and trading. You can find more information right on the blog. And guys, while you're over on the blog, don't forget to join our free trial membership. Our free trial is one of the best in the business. I'm going to teach you more about the patterns that I use, the techniques and the strategies that we use. You'll also learn all about what it means to be a member of the School of Trade. And don't forget, if you'd always like to get a heads up whenever we put something new on our blog, don't forget to join our newsletter, or if you're on StockTwits, or even better, if you get a Gmail account, don't forget to follow this blog. That way you'll get every single post that we put up in real time. As you can see, we put a lot of content on this blog every day. All right, but you're not watching this because you can go to the blog without watching this video. Let's jump right into it. Now, what if we could double the amount of opportunities that we see every day by trading against the trend? Now, in my live trade room, I'm always talking about the trend is our friend. But sometimes the markets aren't trending, are they? And sometimes the markets are trending, but we're able to find opportunities to where the market goes overbought or oversold. So in today's tutorial, today's trade of the day, I want to show you one of the easy ways in which today on gold, right, one of our favorite markets, we trade gold every day, that we're able to use a very simple technique going counter trend. Now, I believe in multiple time frames. I'm a big believer that by using an anchor chart, which is a fractal, right? We talked about that in yesterday's trade of the day. Remember, I'm going to use an anchor chart, and the term anchor is a very commonly used term for the slower time frame. And remember, this is a fractal, right, of the entry chart. The entry chart, can you guess? Yes, it's a faster time frame. So the anchor chart tells me where I should expect to see prices turn or where I've got wide open spaces, right? For example, we usually use the anchor chart to trade with the long-term trend. You can see the long-term trend is red, then it turns to green, okay? So you can see it goes back and forth here and then back to red. Now, what we're talking about on this particular example is the fact that we had a bearish trend here this morning before we opened up our live trade room. Just before, you can see this is going to happen around 8 o'clock Eastern time. So this is in the European market, or the pre-market of the US, okay, between 7 o'clock and 8 o'clock. And this is just a great example of how I'm going to use multiple time frames to anticipate a turn in the market. Now I got some hybrid Renkos on my chart here. Of course, we're just about to release the new JJ bar type. Stay tuned for more information on that, but we're building our own proprietary candlestick chart type, courtesy of NinjaTrader in our own development. So excited to release that to our students. But as you can see, what's going to happen is we're going to come down, right, make a bottom here, 1340. I'm going to jump right up, right? That's the highest point here, of course, you know, early morning, 6 a.m. And then I'm now moving lower, but what I'm going to do is I'm going to define, we call this in our trade room, if you're a student of mine, what do we call this in the trade room? Well, we call it the last resort. We also call it our trigger zone 2, right? Number 2, right? We use 2 trigger zones. One of them is a little bit different than the other. So we call this our last, right, our last stop or our last resort, right, support level here, or our trigger zone number 2. This is also used as our double bottom pattern, right, but that of course will be taken on an entry chart. So nonetheless, we have our last resort here today, and we found that out at 1341.7. The most important thing I want you to remember is this is a very slow time frame. So what I'm looking for here is I'm looking for price to move into this last resort area, and then I need to see it start to move in the right direction. What I'm not doing is I'm not guessing, all right? I'm not putting a buy order right there like a rookie would do and then just hope, right, that it turns the corner and goes. One of the most common mistakes that I see among new traders is treating all of these support levels or resistance levels as if they're a brick wall, and they're not. Remember, support is where I expect buyers to react. Resistance is where I expect sellers to react. I need to wait to see confirmation of that reaction. So if I hover my crosshair over it, you can see it's just before 8 o'clock this morning. So this happened just before the trade room opened up this morning. And again, this is our last call. This is our last resort. And so we're going to look here now to see if price can bounce off a key level of support. And then now here's the most important part. This is where you really put the pieces together on professional trading. Okay, the rookies out there, the new traders out there, they just look for the patterns. They don't incorporate it with another time frame. Okay, looking for the change in direction on a longer term time frame, and then getting into that position with a very tight stop, and now using the anchor chart, right, for the wide target. Take a look how easy it is. Now that you know where you're looking for, around 1341.7, now you know where I'm looking for, right, a potential turn. So here we are. I now open up my chart. Here we are about 7 a.m. and you can see here gold is moving pretty quickly, and you can see there's actually entry patterns on the way down, right? So we can trade with the trend on the way down. Just make sure you take your profit at that 41.7. We talked about that, right, a little bit earlier. Remember, this is the 41.7 area down here. This is that area that we talked about that we're looking for that test, and then we got to see the bounce. Now, again, this is where a rookie trader becomes a professional trader when we incorporate these multiple time frames. So watch what's going to happen here, and you're going to see quickly here we're going to react off this box. Now, again, I'm not looking for anything right now. There's really nothing here that tells me to get long. If I'm short, now remember, we've got trend traders in our room. There's a wave pattern 1 winner. Right, so what I'm doing is I'm glossing over this part, but these are all winning trades as well. There's a wave number 2 winner right there, right? So there are 3 winning patterns on the way down, right? I'm not making this stuff up. You can see this on your own computer as well, right? So 3, count them, 1, 2, 3 easy money winners on the way down. We take our profit here. Remember, the topic of this video, though, is I want to show you how to grab a counter trend position, right, to that anchor chart. So now what are we looking for? I've got to see the entry chart now turn the corner and start to move higher. All right, here we go. There's a good spot. There's a good start, right? Turn the corner here. Now, this would be, right, this would be an entry pattern, but not enough for me, right? This actually would be an entry pattern, but it turns back to red. See, if you look closely there, it goes to green, then back to red. Remember, my job here is to make sure that I'm trading with a green color because that's going to tell me that I'm looking to buy. Okay, so we keep going. Now, here's my new higher high. Now we're talking. Now we've got the turn. All right, all those sellers are getting bounced out because think, where would your stop loss be if you were a seller? Where do you think? My stop loss, if I was selling short, my stop loss would probably be right about here. Right? It'd be right above there. So you should see this price push higher very quickly. But rookies, do not make that mistake. Do not buy this swing high, guys. You know what's going to happen. It'll go up 4 or 5 ticks, come down, stop you out, and then guys like me are going to be buying that, right, that dip. So we're buying the dip and selling the rips, as you would say. Of course, new higher high. Now watch what happens here now. Now we go in and we look for the entry. This is really important because, again, it's very easy for a new trader to go out there into the market and just look for patterns. But we dramatically increase the odds of our success when we incorporate it with a slower time frame. But again, just because I had a slower time frame doesn't mean I can just buy, right? I'm not just going to buy that low, right? I'm not just going to buy at that 1341.7 because what happens if it doesn't stop? What if it keeps going? So I need to find an entry pattern that gets me in that will take advantage or capitalize on what I think is going to be the result of that turn in direction. So I'm a big fan of trading with the trend, but this is a good example here, guys, of a counter trend trade. Again, entry box, you can see in white here, that's going to be your entry box right there. So you're putting your entry right at the entry box. First target now goes to the first green line. We have an 85% chance of hitting that first target. We have a 65% chance of hitting that second target. Members, if you're watching this right now, don't forget if you're a brand new student, this is all covered for you in the course materials. Just watch that wave pattern tutorial. So, of course, take our first profit target. Stop loss gets moved up to point of entry. Once we see a new higher high, now I begin to trail my stop, right? Keeping that stop a little bit tighter. I'm trying very hard not to over-manage the trade, right? There's a big difference between being too aggressive and letting this trade run. Now, everybody's probably heard that term, give the trade room to breathe, right? Give it room to breathe. But the reality is the only time I want to give it room to breathe is when I've locked in all my profit or I've eliminated the risk. Okay, I see far too many new traders out there who are making the big mistake of giving it room to breathe, right, before you've taken any profit target yet. So just keep that in mind. Room to breathe only goes so far. You've got to remember, what if I get stopped out on this trade, right? Is it going to cost me 25% of my account? If that's the case, I can only make 3 to 4 mistakes before I go broke. So giving it room to breathe only happens after we get the first profit target or after we've removed the risk. So once I get above this swing high here, that's when my stop loss now gets moved up to point of entry, right? Now I'm giving it room to breathe. As the price keeps going, I have a specific formula. I'm going to keep ratcheting up that stop, but I'm not going to tighten it up too hard, right? That's a very big mistake. Far too many times here, guys, and you can see here, again, 65% of the time we're going to get that second target filled. So I can take one contract traders out there. If you're a one contract trader, you're going all in, going all out at the first target. There's an 85% chance you're going to get that target filled. That's why our new students have been so successful, right, getting their careers off the ground. And then if you've got a little bit larger account, right, 2 or more contracts, now you've got the second target. You get your 65% chance of getting that second target filled here. There are so many ways to do this differently. I've got students that are loading up all in, scaling out, students that are scaling in and then holding to go all out. Guys, if you want more information about all of the different trading strategies that we use, all the different techniques, and all the tutorials are included in our advanced membership. Don't forget, I'll also incorporate the beginner, the intermediate. I'll also credit that back towards your advanced membership as well. If you got any questions, don't forget to call the office. And don't forget, if you want to see all the trades we take every day, log into your trade room, right, recap in the advanced course. Or if you're not an advanced member yet, I put snippets of it every day up into the free trial. So check out the free trial. Don't forget the advanced membership. I record everything in every day's trade room. You can see every trade we took today in the trade room by logging into your advanced course or just simply join the free trial and you can see it there as well. Don't forget, we'll see you guys in Vegas, end of the month, November 21st and 22nd. Join the newsletter, follow the blog, and don't forget to come back and see me again tomorrow for another trade of the day. Today we talked about using multiple time frames. We found the turning point on the anchor chart, and then we used the entry chart to capitalize on it. Just the tip of the iceberg here for what it feels like to be a member of the School of Trade. My name is Joseph James. Thanks for watching. We'll see you next time.